Good morning, everybody. So in this video, what we're going to do is go through the top 10 stocks I think you need to watch for next week. As always, subscribe to this channel and click notifications because what we go over here is pretty timely. We're just going to start today with how I think you should use this top 10 list. And I just want to point something out. If it's on the top 10, it's something that we're looking for like a short-term move. Sometimes these can turn into longer-term moves, and sometimes they cycle through and you should come back and look at them. So when you have a watch list, think about adding past top 10s to the watch list and cycling through them and seeing which ones are performing and outperforming. And the reason I bring this up is today in the beginning, I'm going to go through this idea just so we're all on the same page on how to use this. And then two previous ideas from last week that still have potential. And then I'm going to do the top 10. But I just want to point this out. This was one that we did about 4 weeks ago. And it played out perfectly, and we're going to get rid of some of this for a moment. And, we looked at it breaking right here, right? And then we came back up, and then we tested, and we think it's over. Then you have the gap, right? And we gap up. We're not even on an earnings gap, and then we just go. So the entire time that you're looking at this, you're thinking you got shaken out. But if you have this on your list, this is a very simple trade idea, right? You can just simply use the low of the gap as a stop and then look for an entry. And if you did that and simply walked up your stop to the low, maybe you got stopped out here from this level, but there's a 4 or 5 points there. Maybe do the same thing here, right? So there's ways to keep using these names. They don't go out of favor just because we're using them as short-term trading vehicles. So just keep that in mind. Last week, too, that I want to just go over are this HIBB. So we were looking for this, and last week we saw this break right here, right? I'm not going to throw the indicators in right now. And then what we've seen is we've just seen it continue to push. The only thing I would say about this is you're running into 2 channels up here. So that's 2 sets of different people looking at 2 different channels, and they're going to make a decision on what they're going to do when it gets there. So you might see a pullback in this level. It's possible. This high right here, this previous high of 93 is over. For whatever reason, the space has been on fire. Sporting goods stores, they've just been doing great. Retail in general, and there's some more on the top 10 list this week for retail. But just when you see this, and let me just pull these down real quick so you can kind of get in here and see what I'm talking about. So you can kind of see how you're heading right into this. So for those that took this trade, congratulations. I think you're up from the break. What? Yeah, I mean, on a slow week, you're up somewhere around 12%. So I'll take it, 10 points. So I really do. I still like it, but I think you have to watch this area and realize that when I'm showing these, they're for a short-term trade, but they can turn into longer moves. The other one that I don't think is over is this LE. I don't think this moves over. This was very substantive volume that came in. Like, this is huge. If you look at it on a relative volume basis, just to put it in perspective, okay, even though this peak's a little higher here, you can see how much higher it is relative to what just transpired. So you're at 4 times average daily volume. When you see 400% volume spikes, you need to pay attention. You need to see what's going on there. You want to see follow through, but I just think it's very important to note this one thing about LE before we get into the top 10, which we're going to do in a minute. And this is why I don't think it's over. See how you're just consolidating right above this breakout point? You're just consolidating there. I mean, it's not what you want to see. Everybody wants their stock to go up immediately when they buy it, like it's magic, but it doesn't work that way. So give this some time if you're still in it, and you can literally use this line and a close below it, which it has not done, right? We have not closed once. Even with this dragonfly bar and this, red hammer, we still have not closed below that level. So keep that in mind. I don't think this is over, and I think you have the opportunity on this one. I think you can even enter it off that break, and I think you have the opportunity in this one to go to the top of this channel, and that would take us to, let me just come here real quick, and that would take us up roughly 23% or $9.5. So just consider that. Let's jump into the top 10 now. So the first one that I like is this advanced auto parts, and let's just roll through it. I have all this volume going away, but here's what I like about this, and sometimes I will look at this. I look at the inverse. So in other words, this volume is the lowest volume that we've had. Like if you draw a line here, right? I mean, I'm lower than the low average, right? So if you were to look at your low average, it's right here. See that blue line? And look, I'm lower than that. Usually that is just when you're seeing a stock breakout and you see very, very low volume, like ultra low volume, which this would quantify as, it's just the selling has gone away. And it just means we don't have buyers yet. So what you may see is you may see a spike like this that alludes to that what I'm saying is accurate. And the other thing that I would just point out on what you're seeing on the volume, note here on your volume how you have one red day, just one red day of volume. So that just tells you that you're under constant accumulation and maybe someone's trying to be very quiet about how much they're accumulating. So there's stories like that in these stocks, and you just have to kind of draw them out, I guess is a better way of saying it instead of drill them out. So, but let's just keep going. So what we're really looking for is we're looking for this break. Now, when you play these breaks, just one way to play them, they don't always go the first time. Sometimes it's the second time, right? And I use a phrase to try to get everyone to wrap their head around this is think of it as a mouse trap. You know, the first mouse gets the trap, second one gets the cheese. So if you see it break out and you try it, which I do the first breakout because sometimes that's all you get. You don't get a second one, right? So if you try the first breakout and it doesn't work, and this is a old, William O'Neill technique from Investors Business Daily, when it pulls down, you just increase the volume. So let's say you did 1,000 shares here. Next time it breaks out, you do 1,500 shares, right? And what that does for you is it gets you in a position where you're actually going to make up what you lost on this one, because the probability of this cutting down and then going through it again and failing is significantly lower than the first time it breaks out. So just keep that in mind. Just because if it fails, right, doesn't mean it's over. It just means it's not ready yet. And just think about it like that. But you have a little bit of an issue right here, right, to that 218 level. I'm not overly concerned about that, and I just want to walk through this. So this is us on the weekly, and we're going to open this up, and we're going to pull this down a little bit. I'm going to have to shrink my logo down a little bit. I think in the future videos, it's taken up too much real estate on my charts. So you can see this level 201.24, and this is really what I'm looking at. I see this channel up here, and I see it as an issue, but I have this enormous base, right? And you can see it undercutting here. But let's just look at this tighter area for a moment, and we're going to get to this cup in a moment. But let me get rid of these indicators because they're not really helping us. So what you're seeing is you're seeing a clear breakout here, and all I'm looking for is for follow through here, right? So I've come back down, broke out of this level. Do you follow me? So we just talked about first mouse, second mouse, right? So you pop out, come back down, and now you're going to go again. So just kind of keep that in mind. While you're on the daily, we're looking for the breakout. Okay, we're looking for the first breakout here, right, of this level. On the weekly, this is actually a second attempt. So this is why it's so important for people to go through stocks and look at them on weeklies and monthlies when they get the opportunity. We just had a month end, so you look at it on that month end. You really don't want to take into account what's going on here right now. But if you were just to look at this on a month chart, right, and get rid of this bar in your head for a moment, you'll see you closed at an all-time high on the monthly. And I think that's pretty significant. And now you have this base, and we can just even stay on the monthly here, right? Now you have this base that you could argue is actually starts down here, and this was our top of that base, right? Well, we can actually let's just use this point just for the sake of argument. So I have a 100-point base. So when I break out, this could break out. And if you count that, and this is out years, but you could be looking at a 50% move over the course of a year. So this has a lot of potential, and it's definitely one I would keep on my radar. If you're looking for more of the short term, you just want to see a pop. You're looking for the pop to get to here to 219 to 220. If I close below the breakout line, I could retest these levels. And then you can also just throw in your dailies and use your 8-day as a guide. And if you break the 8-day on one of these and you're looking short term, you're just going to use that as your stop. And this 8-day by Tuesday, Wednesday will be closer to this 210 line. You're going to watch that move up pretty fast here. So that's the first one. That's number one. Number two, People are going to say, I can't believe you're looking at this. I am looking at this, and we're going to walk through this. I was going to save it for the end, but I'm going to keep everything in alphabetical order. Let's just get to it, and I'll point out what I'm saying. So I was reading some news today, and this is why I put it in here, because the news that I'm reading is talking about something that Google was doing or changing, and that's why the stock got hit. And apparently one of the vice presidents came out and issued a statement that it's actually good news for the company. So we're going to have to watch this, but there's a really good chance that this might snap back. There's also some talk that this might have sold off because of a microcap rebalancing of the index. So as I'm getting information, which I didn't have yesterday, I'm starting to understand that this might be an opportunity to get into a really good growth name very cheap, and we might be looking for a bounce. Now, that's not going to affect us to the point where we're just going to come back up and fill that gap. It's not going to, this trade is not going to work that way, because all these people that are in here still are going to want to get out. So what we have to do is understand what's going on. I think it's very interesting when you look at the close and the low that we came right to the bottom of the bar and didn't break the bar. I find that very interesting with the Bollinger Bands. It's a kind of a sign that, hey, if we're not breaking today, we're probably not going to break. So usually I can use that as a guide, right? So in other words, what I'm saying is if I was going to break here, I would have broken on this news, on this volume, and I didn't. So I stayed within 2 standard deviations of the average trading move. Well, that's good to know. Let's get rid of this 8-day for a moment as we walk through this one. So what I'm really looking for is to establish this as you're going to have to look at a shorter term trade on a 15-minute or an hourly to establish where to get in this. And you should be using your processes. And if you don't, reach out to me and I'll give you a couple processes that you may want to consider using. So, or just comment, and then I'll comment and link you to something. But see how you're holding right here and see how you broke this line. But I just want to go through this line because this is pretty substantive, and we're going to get rid of all this. And I just want to focus on this line. So that's our short-term uptrend. And you can actually see that you could lay it over and it would fit right in here pretty clearly. And this is not going away, right? But we're down here. So we're looking for this to trade. Now, what we want to see is we want to see this flip back into this. That gets us to about $70, right? That's really what we're looking for. But you're going to have to use this low as a stop. Now, here. Let me just show you this because this was kind of interesting to me. So see how we were rejected here and then we formed this morning star and then bounced off this level? So this level is important. What else we stopped at was here, right? So we didn't break that low. We never undercut it, which is kind of interesting. So let's move this out of the way so we can drill into this. So you have some levels here, but what I would recommend is if you're in this and it takes out the low, you do not want to stay in this. So, but the news that I'm reading, and if this is valid news, and it seems like there was a statement issued by the company, is alluding that this may just be completely misunderstood. And if that's the case, you could see a rally. You could see a short-term rally in this. I don't think you're getting above this 79.80 anytime soon. This is what we were running into beforehand, but I do think that there is a bounce short-term trade in here now. And what I would do is I would overlay something like looking at a 15-minute chart and trying to figure it out. So for me, looking at this, I would be using a couple very simple techniques. So, and I'll just go through them. Let's get rid of the bands. So the very first thing that I would be looking at is the VWAP of the stock to determine where we're really going to be. And then the second thing I would be using is RSI. And that's going to be, I believe, right here. So let's just focus on that. So what I'm really looking for is to understand what's going on here. So, and this is a really good lesson because, people always say when it gets to 30 on RSI, you should be looking to buy. This got to 9. Okay. So that when you're in single digits on an RSI reading, even though it's on a 15-minute chart, you're due to bounce. You really are. And I did try to play this bounce a couple times, but what is interesting about it is it's not over. I mean, as this starts to point up, and get over this 30 line. And you'll notice this from if you watch the RSI a lot. When you undercut like this and then get over something reasonable again, you tend to see a snap back. But what I would really look for now is a move over this 69.30. And I do go into this much detail. Some people don't, but I think it's very important. So I think, the stocks are telling you a story. You just have to find it. But 69.26, when I get over that, you see how we failed already once? When I get over and close on that in the 15-minute, that's going to be a trigger for me to enter. Then I'm going to have to see how it responds to the VWAP, because we haven't done what? We haven't closed over that VWAP since this nonsense started. So we're going to need to do that. You can also see on the 15-minute how the purple line is point of control. So what does getting over this do? It gets me over the red bar, gets me over point of control. It fills in this wick and gives me the opportunity to see if it's going to get to this 70 level. So that's 69.5. That gives me $1. So when I get up that dollar, what you may want to do in the chart is, and it's entirely up to you how you trade, but you might want to move your stop to break even, and then the trade doesn't cost you anything. Or you want to just see if you stay on 66 because you like the stock long term and you think that it's grossly oversold. So there's two different ways to play that, both short and long term. This was one that we had on the list before, and I think it's presenting us an opportunity to get in it again. And let me just walk through this. So, and it's interesting because you have to understand the market, and people get very rigid, and don't get rigid. Like, just avoid that, because what some people will do is, I tried to trade APPS twice on Friday. It didn't work. Who cares? Try again. And you can always go back into a stock. It's not like there's a ticket. You only can use it so many times. BGFV. So 35.13, see this level? 33.14, see these levels? So we traded this before on this break about 2 months ago. And May, so about 2 months ago. So the reason I'm bringing it up again is it's setting up again. And it's setting up pretty much very close to its breakout. And I think that that's really very important. That's what you have to understand, and that's what you're looking for. So what are we looking for? We're looking for this level right here. And what we want to see is we want to see this level continue to push, right? But you see how you're sitting right here? So all I'm looking for is a very simple trade. And we can get rid of this. We can get rid of all these segment lines, actually. They're not really helping us. You're sitting on this volume shelf and you're holding. So that means that this shelf has now flipped to what? Support. Okay. We still have all this nonsense up here that we have to get through. You see this volume coming out? But this sector is on fire, right? This is that HIBB sector. So all they're doing, and to keep this market alive, is they are rotating. The majority of people out there, these institutions, are rotating through names. And when one gets beaten down, they get back into it, right? Just like we saw with this. See how this one got beaten down, and then everybody gets back into it because it's cheaper. People are chasing growth right now. If you look at what's going on in the market as a whole, right, just think about it for a moment. Why are certain stocks going up and others cratering? Okay, if you start going and saying, start looking at growth at reasonable prices, it's something called GARP. Just think of like that for a moment. It's one of the reasons why you're seeing large caps act the way that they act. So let's just keep going here. But what we're looking for is that 27.5. And if we get through that 27.5 on volume, which we have not had, I think that this can have the potential to get back up to this 32, 33 and retest these little wicks. So again, we can overlay some just key issues here that you should be well aware of. But let's just throw them out there so that you are. And let's throw the 50-day in here as well. So what you're seeing here, and why this is so fascinating to me, is getting above this level gets me above the 50-day, the 21-day, right? And it gets me above this level. All on that small little move will get me above that. So that's really what you need to watch. Now, for me, if I broke that and closed below the 21-day or the 50-day, depending upon your risk tolerance, that would be enough and tell me like, okay, it's probably going to need more time and I'd rather put my money somewhere else. So that's another one to consider. This one has just been an absolute monster. And to me, it's setting up again. See how we have like literally no volume? And I know people don't do this, but I'm just going to show you something. See how this is the low of your volume bar? Pay attention to that. Okay, so when you have a low of your volume moving average, and now this is at the low of that, right? And when you see this, what I'm just pointing out to you, and I know it's hard to see on this screen, but when you're below this line, that is just evaporation of volume, right? Because I'm at the lowest point that I've been in over a year. So when you see things like that, they're giving you a little signal like, hey, maybe this selling has completely dissipated. So just one way to review a chart just a little differently. Now, if you look at this BNTX here, get rid of these, right? I'm just setting up the shelf. But what's so interesting about this, okay? Here's what's interesting. Wicks are price rejection, right? We all watched that video that I did on candlesticks that work, how to actually read candlesticks and make money off of them. I'll link it again at the end of this one, but it's definitely worth watching if you haven't seen it yet, because there's actual pattern recognition in there that will save you a lot of heartache and time. And it'll get you up to speed faster on what we're doing here. So, but you see all these wicks? Every single one of them. What are they? They're all rejections. Wicks are price rejection. So every time I'm selling down, I'm rejecting. So that's telling you, and look how tight this is. When was the last time that we saw BNTX trade this tight? It doesn't do that. So all I'm looking for is a simple wedge break, and I'm looking for a test of this 250 level. But this simple wedge break, you can just use that line, and you can use that line and the 21 and the 8-day as your support and resistance and your stop. So you're actually able to get in this relatively cheap, right? You're really able to get in this. Let's just say that we want to be above the 8 and the wedge, okay? And that, just so we can understand that number, right? So you're really looking at 227 is really what you're looking for, right? Because that 227 is the high of this bar. Now, if you look at it this way and take these out again, you haven't hit a higher high. You have not closed at a higher high. So that's all you're looking to do. You're looking to close at a higher high here. And that would get you above the 8 and the 21, and that could break this wedge. And these wedge lines, just so we understand, people say, how do you get to those targets? You take the high of the wedge, and that gives you an understanding of where that pattern may go and how you might rise up. So let's just keep going here. I do like this trade, and it could work even longer term. I don't want to get into the fundamentals of it, but there is a huge channel here, right? So this does have massive potential. But for now, what we're looking for is to get to that 252 level. CNXC, this is one that's been out for a little bit. It hasn't been around that long, right? Only since December. You see this 114 level? Let me put the symbol in right here, CNXC, and throw this in. Let's pull this down. So I'll throw in the bells and whistles and indicators in a moment. But what we're going to see is just a very simple, look at this. This is set to break. Now, what we're going to do with this before we get into it is just review what we're seeing on the weekly. And there's really no reason to look at a monthly. But you see how you're sitting right at this level? Okay, this is just starting to break. Now look at this. Okay, see how the volume spikes have been going? Right? Look at all that red volume, everybody shaking out, and now we've undercut the base, right? And usually that leads to a move higher. Now what we have here is on the daily, we tried once and failed. We kind of tried here, but not really. Tried once and what? Got rejected. This was the second time. Look at this bar on Friday, okay? And Friday could have been an entry as well. But look at this bar, right? I open at the low, I close at the high. I have volume increase over the selling of the previous day of all these little bodies. So all I'm really looking for here for your secondary trigger is confirmation. Get me through that 166.28 level, right? And you can see point of control here and how these moving averages are going up. You can see this flag pattern here, right? So what we're really looking for is just a higher high and getting above that level. What I like about this is not going to be this huge fast mover, but you have a slow grind here. And that slow grind can just get you right up to 193, 194, where you're at right now. And on a risk versus reward basis, and that's how you should be viewing your entire portfolio, risk versus reward, not just buying something because it's hot and people are talking about it. But you see this, the 31 points here, that's 20%. that you could get to right now. And what is my risk? My risk is 5 points. So again, I will risk 5 points every day to make 30, every day, all day long. All I have, I mean, if you're right 50% of the time, you're set. So just think like that. Very simple math. So CRNC here. Let's just throw this one up. This is what I like about it, and this is a very simple one to play. And we don't really have to spend a lot of time on it. I'm just going to give you a really quick way to understand this. See this enormous base? Okay, this base is enormous, right? Going back to here, going back to December, okay? Now, here's your VWAP of volume by price. We just happened to hit it and then bounce. We just happened to gap above all of this, right? Very simple trade. All you're doing is looking for a higher high. You get a higher high of 127.80, trades on, okay? That is not going to be our stop. You see that 119 level? That would give me what? 10 points. There's a very simple way to do this trade and to come up with a new stop level. And we're looking at a short-term trade here that could turn into a long-term trade. But all you're going to do is you're going to choose one of two different levels. You can choose this level as a stop. It's actually a little higher than that. It's actually the high of this opening, which is 120. So let me pull that down. Thought it was a little higher. No, 120. So that would get you set a $7.50 stop instead of a $9 stop. The other level that you can use is the close and 10 cents. So the close of this bar was 123.74. So you could use like 123.5. You really shouldn't break your close. Let me just move that up just a little bit so you can see. Yeah, well, that's probably as good as I'm going to get it. But 123.5. is what you could use, because you really should not go below your close. If you go below your close, something's wrong, right? You shouldn't open, right, a breakout above this, close below your open, and then close below the close below. Neither one of those should happen. So you can get this with a 4-point. You could actually use that 4-point move, 4.25, we'll call it, by the time you have slippage and everything else. Now, let's get rid of these indicators. When this gets up here, this is where we're going, 139. So I think that this has 10 points of potential. So just to start, now if you get through that, okay, you have this enormous channel that's just been forming forever. See it right here? Let's get this out of the way. And let's pull this down. But here's your channel. So you see every time it pops out how it just comes back in, but that's substantially higher than the 139. I mean, this is almost, you know, it's, if you get into this channel after basing for a year, you're almost at 200. I mean, this has massive potential. I'm just looking for the short term from here to here on this risk basis, but this is something that somebody could stay in for some time, obviously. So, and let's just go to the next one. LOGI, Logitech. So let's just go through this very quickly. This one's not really that complex. What I like is I like that you got to the 50-day and you held. I like how you closed above the 8-day, and it gives me room to get to the 21 and get in the trade and then move my stop up. I like the fact that, here, let's get rid of this. And you can see this very, very clearly. Right? So that's your level. Now, if you overlay that with your 8, it kind of tells you where you're going, right? And you can kind of see the channel part down here as well. So I'm looking to flip this channel. And by doing that, it should get me right back up to here. Also, what's really very good about this one is here, look. See how we pulled right back to that breakout and we held? So not only did we hold the 50-day, we held major support. So if you broke major support, which is 120.24, you have to be out of the trade. You could wait for the 50-day, but for me, those 3 points are everything. And I don't want to be in this if I'm closing below the 120 level. But what this does do is it does get us in a position for $3 of a stop to possibly realize 18, right? And this will be a slow turn. It's not going to be one of those days where it just goes up. This one takes its time, and just let it. And here you are on the weekly, and I just want to point this out on the weekly because I thought this was important. See how you touched the 8-week and you didn't close below it, and you kind of reversed, and you just happen to do all this again. And you can see it from here a little bit clearer, right? And that's why you use weekly charts sometimes, because it just gives you a better picture, gets rid of some of the noise. You could even go on this one because it's been around a while, but you can kind of look at it on a monthly and go, okay, well, we tried to have a fail bar here, and we tried to have an evening star, and we failed, right? Because we closed above this level. And so this could, and we don't know how this next bar plays out. We have no idea. But what we're suggesting is that it's already not breaking down, and we're hitting a key level. So the chances of that evening star going through are probably pretty slim right now. So we're looking for this to break and then get to that 140 level. And this is LOGI. At the end of this video, I'm going to do another one very quickly that's not, in the top 10, but just you need to keep your eye on it because it is shaping up. It's a much larger cap name, but I'll go over it very quickly. I would be paying attention to this. I'm very interested in how this volume is just completely fallen off. I'm below the low of the line, like completely below it. Like it's just completely evaporated, all the volume. At the same time that it's evaporating, look at where I'm at on the volume shelf. Right? I'm going to get right into this with no volume. So what that means is if somebody steps up in here and buys this, this is going to go pretty fast. Now, some key levels that are marked off. But look at this. And let's get this out of the way so we can really drill into this. And you can see it. So you're sitting right up here, and we just broke. Okay? So by breaking this, your first target is this, 387. Now, very simply, you can take this out of the way, right? So that's all we're looking for is to get to this 387. Now look, I'm above the 8-day, I'm above the 21, the 50. Here's your point of control, right? I'm above the VWAP, I'm above everything. This is telling you that we're going to grind higher. I mean, and I'm going to fall off the cliff with volume. So it's telling you everything that you truly want to see. And you can basically get in this and if you're not reading what I'm putting down, I'm very attuned to risk, right? So I'm looking at this and going, well, 364 is 4 points. And how I come up with these ideas is I go through a ton of charts and I just come up with looking at risk versus reward, and I look for very interesting patterns that have a high degree of probability of working. This is one of them. So I'm at a 4-point stop on a $300 stock, okay? And I have 20 points of upside. Now, and realistically, what I think is going to happen here, because this space for apparel, for whatever reason, has just been on fire again, what I think is going to happen, and what I'm really looking for is not 387. What I'm really looking for is 402. I think this grinds higher. I think this trade can take a couple weeks, but I think we grind higher here. As far as events coming out, we don't have to worry about earnings to September, so we have no risk there whatsoever. So I would definitely put this on your radar. Some of these names are going to be a little larger than before, and that's just because of where the money's going in the market. So let's just keep going. And if you find this helpful, please do me a favor and click the like button, because I'm trying to get in front of as many people as humanly possible to show them what it truly takes to be successful at trading. So here's your 69.35 level, right? So let's look at this, okay? So let's just take a look at this. What we're going to see very simply here is something that has been trying to break out for a very long time. And we've gotten to the point where we've come down and broken, come down and broken. I mean, you can see it over and over again, right? It's like every time I trade this, it feels like an abusive relationship. It's like insane. So it just keeps shaking people out every single time. And like, you can't walk away from something like this because of what it's doing, because it keeps stopping you out, right? You just have to find a way to kind of stay in it or do shorter term positions and kind of go from there. So let's just go through this. Okay, so this is that wick. Okay, so here's our wick, right? This is the wick that we're respecting. Okay. We're going to open this up. And you see how we're here, right? We tried and failed. What did we do again? Tried and failed, right? So you're not even closing over it. So what I'm suggesting is you see this little pattern that's going on here? Right? You need to break that level. So if you break that level, finally, if you break that level, you're going to get up into this pretty quickly. Now you've broken here, but you've never gotten above a higher high since you broke out of this day wedge. And that's what's very interesting to me. We did have a trade in this previously where we made money on it and then just got stopped out. We bought this breakout and did okay, made a little money, but not the real money that can be made with this trade. There's a lot of potential here. I think getting through this, you're going to get to this level fairly quickly. And I think you're going to start this whole process all over again of grinding higher like we did here. Now, as far as earnings events, we don't have to worry about it until the end of August, September. But there's a channel here that if we can finally get into, and you can just see this base. And I just want to point that out, right? You're going to see a lot of this. And the last one I'm going to go over is a really large cap name. And you're seeing a ton of this. People aren't realizing that these large cap names, and I consider this a large cap name, have been basing for almost 7 months, 8 months. So yes, we broke out, but you came down, and that's why people aren't making the money that they thought. But you're starting to see a massive change here. So I would pay attention to it. But let's just get rid of all this so that you can follow along. So okay. So from here to here is where you can actually head to. See how you failed it here? And then you tried to get back over it, right? Like, look at this. So you can understand it. Bonk. Everyone's doing cartwheels. And for people that have been following the newsletter along, and there's a free link for the newsletter in the description. It comes out once a week. It's kind of like an update to the larger newsletter, but it's free, and it gives you an idea of what we're doing. But see how you're riding this level? See how it flips? Everybody knows this about how I view these trades. So when you flip this level and you come down and you don't stay in here, right, you usually revert to the 21 day, and that's exactly what happened here. So when you break these out and then come back down through them, you're going to revert to your 21 day usually. And usually those patterns, what you'll find is they'll almost fit perfectly with that Bollinger Band trade where you pop out of that pattern, pop back into it, and then revert back to that mean. Usually the upper channel of these lines, when they spike, it's kind of the same pattern, right? But it's nice to see another identifying indicator there. So that's it for a nutshell. But I think that you could see this really move. And it's very simple, very simple in the daily here, right? You're just don't close below the 8 day and just keep using the 8 day to move you up and stay in the trade. That's how I would do it. I would do a close below the 8 day on this. I mean, it's very clear that we're respecting that, right? We can all see that. So that's how I would view it. UPWK is a name that I've been watching, and to me, it's finally getting to a point where it's going to get very hard to ignore this. And let's get rid of everything here and start all over again. So you can understand why now I'm taking a look at it versus before. And a lot of people have been asking me about the name, and I've been apprehensive. Let me just show the events that are coming up. Okay. So what we're going to see is this. See this 58.79 level? Okay. We can't close above it. For whatever reason, we tried here, failed. Tried here, failed. Hitting here, failed. Failed. Kind of, not really, failed. But this 8 day is being respected. So that's putting us in a kind of a weird situation, right? Now here, look at this. Okay? It shows it even clearer. So see this level? We just can't do it. If you go, no matter how you look at this, I think it's really important to understand, yes, you had this really nice break here on your monthly, right? You can see this wedge break. This was very clear in the monthly, and I didn't look at the monthly on this one, but you can see that 45 level, and then getting above this dragonfly doji, just boom, broke it out. But I think that's the beginning of this move. There's a channel here on this monthly, and this is a monthly, so you have to take that into account. It's not a daily, so it's going to take time. But there's a channel here that is telling you that this is going to clearly, that if we get, through this, we can go a lot higher. And you can see the parts of that channel, just FYI, from like here, and you can also see it from over here. So I really think that this has a lot of potential, and I like the idea, but it's got to do this. It has to get above, just keep this in mind. We need major volume, right? See how the volume is falling off below anything that's even recognizable, right? And yes, you had a short week, but it's been doing this since June. And by short week, I just mean that you had a lot of people that just simply weren't trading. But get above this level and close above this level. And then when you close above this level, you can start using the 8-day as a stop. And what your hope is that when you break out, your first key level to watch is obviously going to be this wick and how we respond to 63.88. But that channel, getting in that channel, this could go to 70, 75, like fast, really fast. And it's a fast mover. This is a fast mover. This was one that I bought, at 15 and then sold at 25, one of those trades that you do and you think that you're really smart, and then it just keeps going. But you have to trade your system. But even on this break, you can see it, right? So when this gets moving, this can really move. So I put this on your radar. Finally, I just want to throw this out there. You can keep it as a top 11. This action after he retired on Friday is fascinating to me. So I don't think that you need to rush into this right now, but large cap is at the beginning of a bull market, which I know people are having a hard time understanding because we never left the other one. Large cap moves first. They buy growth. They buy growth at reasonable prices. That's where the money goes first. Okay, GARP. And that's what you're starting to see. That's why you're watching the FUBUs of the world not working the way that they once did. Okay, people are buying real growth companies that have earnings, sustainable revenues, and you're seeing the institutions go this way. So that's one of the reasons why I'm so focused on large cap right now. But this break through this level, and I wouldn't touch it until it does it. I mean, 50 points on a $3,600 stock should be the least of your concerns. But I would watch this very closely and see if we break this level, because you have been basing, and people are not understanding this because they're like, oh, it's Amazon. You have been basing since June, right? Since June this started. So you have a full year base on Amazon. It never broke down as the pandemic got better. It's very interesting to watch, but what I would argue is that this could really go. There's a channel here that is just, and I'm going to do it this way because it's just going to be cleaner. Okay. There's a channel here that is enormous from this point on. When was the last time that we consolidated like this? It was down here where people's like, oh, it can't go any higher. Right. And then what did it do? So it can always go higher. And if you look at this, right, you'll see exactly what I'm talking about on the monthly. And we're going to zoom in on this. See these wicks? See how I can't stay above that level? Okay. So this bar is finally doing it, but the month just began. So you have to see if it actually goes through. The real level that you're going to use is the top of the wicks across the board, which is, 35, 60. If you do this, I think it's a great, I would strongly recommend looking at it. And you can do option plays on this because they have a low IV. So you don't really have, with the implied vol low, it's very easy to trade this at parity. Very similar to, how shop traded and things like that. So it's definitely one to keep on your radar if you're an options person and you're comfortable with that. If you're not comfortable with that, don't do that. You really have to know what you're doing. So that's it in a nutshell. I hope you find this helpful. As always, please comment and let me know which one of these you found most helpful and most interesting. Thank you very much. Have a great day.